Hey everybody, in this video and this whole series of videos, we're going to work through the Chapter 6 workbook exercises. And so we're going to begin here with AP 1B. Okay, so for AP 1B, we have our adjusted trial balance here. So remember that's basically our ending balances for all of the accounts in our accounting system. And you can see them broken out, debits and credits. We can see that debits and credits equal. And so we're looking good there. That's our starting point. And the problem provides some information. It says we've got the adjusted trial balance here, December 31st. And note during the year that the owner contributed $20,000 to the business. So the reason that it highlights this or includes this information here, and that's important, is because when we make the contributions, especially in our book, the way that they show those are direct increases to capital, not a separate account like we see with withdrawals. So when a withdrawal happens, there's a separate account that shows it. But here, when a contribution happens, it's just an increase. Basically, it's included in this number. And to properly fill out our statement of owner's equity and list that investment of $20,000, we kind of need to break out what the capital would be without it. So I've included this little section down here, and I've made the highlight the same so we can just pull that number down. It'll equal our capital. It tells us that we contributed $20,000. So I just put that in as a negative, and then we'll just add those together, or subtract one from the other, essentially adding a negative. To show that before we made that contribution of $20,000, the capital balance was $88,200. And we can link this in right now since we're doing that calculation. That will be our beginning balance of capital. And then the investment piece broken out will be noted separately. Okay, so we'll start with the first statement and complete it 1, 2, 3 in the proper order, but I just wanted to show that and break that piece out so that we can see why they're telling us this information in the instructions there. Okay, so now that we've got that accounted for, we're going to prepare our income statement of owner's equity, and then the balance sheet. So remember that on the income statement, we're going to have revenues, expenses, and that's going to calculate to net income. And so we're going to begin with revenues. And instead of retyping all of the information from the trial balance again here, I could type in service revenue. There, I could type it all in, but it's not really a necessity, and that is somewhat time consuming to type it all in. So a more efficient method here is just to link. We can put an equal sign over to the cell, click enter, and then we'll have service revenue shown here. And then we can do the same thing. There's only one revenue account, and then we can do the same thing with the expenses. But sometimes though, you will run into an error. If you have text as your number as the format, it will just actually list that equals that cell. So if that occurs, what you want to do is you can click the accounting format button, and then you can click back into that cell and hit enter, or you could just redo the selection there. Oh, geez, no, I didn't do it right that time. Back to the accounting, and then with it as accounting, then we can go back through and select that. Okay. So sometimes the formatting, it'll kind of mess you up there depending. And if you see that equals the sign, just go back through and get it figured out. Yeah, and then you can just drag this formula down, so then it just pulls over all of the comparable accounts. Okay, so now one thing I wanted to highlight is that there are two columns in these financial statements, like the owner's equity and income statement. Those are not debits and credits. On the financial statement reports, there's no debits or credits specifically left or right broken out. Debits and credits really only exist in the accounting system and the behind the scenes reports like the trial balance, so on and so forth. On the financial reports, these are basically just pluses or minuses. We're just showing ending balances. Here, those ending balances are reflected as a debit or a credit, but the two columns are not debits and credits. They're just a place that we can use to identify multiple, if there's multiple items like multiple expenses, we could show those all here and then just sum them up. So this is not debits and credits. Okay, so let's do a similar thing like we did with the names. We can just we can link over and link these down. I'm gonna click in twice to link that, and then I'm gonna get my little cursor down there and just drag that down. So you can see how it just automatically selects. So it's really easy if you have your trial balance. It makes it in Excel like this. It makes it easy to just summarize all of the information. Okay, and then total expenses will be all of these. So we can just select those. And then remember, net income is revenues minus expenses. So 70,000. And then the reason we do the income statement first is because net income will come down to our statement of owner's equity. So we bring that down here. You can see the arrow. Our withdrawals have 40,000. So that it'll be beginning plus these two items minus the withdrawals. So beginning plus our two additions minus our withdrawals brings us to 138,200. That number then, the ending capital, goes to the balance sheet. So the balance sheet will be our last selection there. And we can link over. One nice thing about the trial balance is it generally will group the assets first, then the liabilities, then equity accounts, then revenues and expenses. So a lot of times it is pretty handy to just link over, and then you can just drag down to capture the information if you have it in an Excel type format like that. And similarly with the amounts, you can basically do the same thing. One little formatting thing, and I guess I'll do it here as well. This is not really a big deal at all, but proper formatting of financial statements does basically state that having dollar signs at the top and the bottom of a given column like this is the way to go. So I'm just going to put those in now. But if you don't include those, it's definitely not a big deal. It's just a minor formatting thing, but figure I'll do it since we're working through these. One thing to watch out for, remember, accumulated depreciation is a contra asset. So we're going to show that as a negative amount. Included with the assets, it has a credit balance. So it is a negative. That's the whole idea of the contra asset, is it reduces the overall equipment. So the net book value of our equipment now is the sum of these two items, or $270,000 basically. So sometimes you might see this in the text or in another place. We could have an extra column where we specifically have those together, and then the net book value is what is shown, so on and so forth. But I'm just going to include them all in the one column together here. But note that this is all the depreciation expense we've recorded to date. This is the historical cost, and like I said, it's $270,000 net book value when you take into account the accumulated depreciation. Okay, let's look at the liabilities now. I just kind of drag that down until I see I'm pulling in equity accounts, the capital, and we don't want that. That's going to go below. And then we're just going to link in all of our equity accounts, summarize those. 301,800. We already had our capital because we just brought that over right away. And then we're just going to go into the cell here and add liabilities and capital. And you can see how we've got 440,000 on both assets and liabilities and equity. So we balance, and we're doing good. All right, so not anything too earth-shattering, I hope, on this problem. We've been doing financial statements since chapter 2, essentially. We have this trial balance now, and it's actually pretty handy to have because we can just pull the information over. The only thing we had to kind of do, I think, for the first time here was take into account that there was this contribution during the year that we had to adjust this capital balance for to properly represent this on the statement of owner's equity. So, all right, well, thanks, everybody. That brings us to a close on AP 1B, and I'll see you in the next video for AP 2B.